Hi everyone, Troy Sage here, and today on Real Estate Talk, we're here with my friend and top-notch lender, Ginger Anady from Penn Financial. Welcome.
Thank you, Troy.
So what our plan is, we're going to have several episodes on lending, different types of loans, and what a buyer should expect when actually purchasing their property. So let's start with this, Ginger. With any type of buyer, what kind of loans are currently available for buyers?
Troy, that's a good question. I think it's very important for everyone to realize there are different types of loans because it depends on a person's situations. There's government loans and there's conventional loans. The top three government loans would be FHA, VA, and USDA. VA is backed by the Veterans Affairs and is offered to veterans. USDA would be a specific type of loan for a general a specific property, a specific area. It doesn't apply to every house. So it really depends on the property. And I'll go over what these loans are in just a minute. But then there's a couple conventional loans I wanted to talk about. The biggest difference between a conventional loan and a government loan, there's guideline differences and there's requirements of down payment that are different. With an FHA loan, 3.5% down would be a standard. VA loans, you can get up to $1 million loan in any county, but only a certain portion of that is at 100% financing. For instance, in Riverside County, $424 would be the maximum amount for 100% financing for VA.
So a veteran or active military, they can literally come in and buy a property with no money out of their pocket.
They sure can, up to the maximum loan amount in that county.
Okay, and I mean, there's other things involved. There's closing costs and stuff like that, but those
Sure.
are things that the buyer can ask the seller to contribute to, right?
Absolutely.
So tell us a little bit about these conventional loans, because I've heard that some people might qualify for an FHA loan, and then their payments are higher than if they went conventional. And can you kind of touch on that briefly?
Absolutely, because everybody has a unique and individual scenario in their lives, and sometimes it's better for somebody to go with an FHA loan or conventional loan. So the biggest differences is with conventional loan, if you're a first-time buyer, you could actually put 3% down. But however, the general would be anywhere from 5% or more as a down payment. Depends on what somebody has saved and also what debt ratios they're carrying.
So when you talk debt ratios, you're talking about what they're paying out in credit cards and car payments, and how much compared to how much they actually take home every month, right?
Absolutely. Yeah.
So what's the key thing that a buyer really needs to consider when they're choosing a loan?
Is really to look at all their situations. And what I like to do is run all the different types of loans that they qualify for and let them know what the advantages and disadvantages for each one are for them. That's
an awesome idea, because some people will walk in and talk to a lender and say, I want to buy a home, and maybe that particular loan officer or institution is only going to run, say, an FHA loan for them, and they find out later on that, well, if they would have gone conventional, in the long run it might have been better for them, right?
Right. Yeah, absolutely. That's very common, because just because somebody has a situation today that they have 3.5% down, or maybe their credit is a little higher, a little lower, or there's whatever the reason is that they're looking at an FHA loan, they may not realize that conventional is an option for them, and they should be able to see those payments and see what the long-term effects are for that loan. And it's also very important to know what their goals are. If somebody's going to be in a house for 3 to 5 years versus 5 to 10 or 10 to 15 or lifetime, that can make a big difference on which way to go with the loan.
That's awesome information. So in some upcoming episodes, what we're going to actually touch on is like the different long-term goals for a home buyer on their loans. We're going to touch on what they should do if they've gone through bankruptcy or foreclosure. There's different loans in place for that. But for you that are viewing this episode, understand this: there's a lot of different types of loans available. So when interviewing a lender or a loan officer, make sure that they're giving you a large picture of different types of loans that are available to them. And make sure that it's just like picking a real estate agent. Make sure that you're comfortable with that lender and that you're always on the same page. Again, this is Troy Sage, Ginger Anady of Penn Financial. We appreciate you watching our video. Please subscribe and make it a great day.